weekend all. Ira Epstein of Linn Associates with your weekend wrap-up for your financial markets, and this is for Friday, March 20th, 2020 at 4:15 p.m. Chicago has been issued a stay-at-home order, so that just came out. It takes effect tomorrow. That's Saturday, so the odds are you're not going to see my pretty face for a while. We don't have the studio set up remotely, but I will be able to put these out just without me in them, so I'll talk over them and look for them to be coming out. So nothing's really going to change. I wish I had the studio. We were supposed to have it set up this Thursday. Can you imagine? I just missed it by 5 days. All right. So the pattern that we've been seeing in so many of the markets is this. You get the bad news over the weekend in the U.S. and Europe. The markets have been cratering on Sunday nights, going into Monday. Then we've had a bunch of Tuesday reversals recently, flub-a-dubbing on Wednesday. Thursday can go either way, and Friday, well, you got to gamble which way do you want to go home. Now, today was a little different. You had triple witching, so it added pressure to the market. And remember, you're now in the Junes when you're trading the indices, but they're down sharply. When we look at a weekly chart, let's start with the monthly, actually, and get a feel. The monthly chart has come down from 32.31 all the way to 24.38, roughly. That's one heck of a drop, right? It's about a third. Typically, recessionary-type markets go about 35%. I've mentioned that before, and you can see on the monthly, we're right in that zone. That doesn't mean there's not more to come, but you're knocking on the door of what I'm going to call a norm. When you go to the weekly chart, you can see how you've come down here from the 33.81 all the way into this low point. Same thing, getting that third retracement, and you see how the weekly bar chart looks. Now, when I come to the swing lines, the pattern is one of lower highs and lower lows. What the swing line does is you take this type of chart, and it's a indicator I wrote many years ago when my son, got to be 20 years ago, he was younger. And I said, if you can figure out where the arrows are on this, in other words, where the market's got lower highs, lower lows, higher lows, higher highs, you'll be able to always say what a trend is, and you'll be able to say what would break the trend. Well, from here, breaking the trend, you'd have to get over this 31.37 level. What about key moving averages? Well, the market did try last week, didn't hold the 200-day, and now you're just going through it. So as for talking on the moving averages on a weekly basis, no. When you come back up, that could be a resistance point along with the 100-week becoming a resistance point. When you take a look at Bollinger Bands, whether it's a weekly chart, monthly chart, daily chart, the market will trade within the bands 95% of the time. So admittedly, you're out of it this week. You were out of it last week. The week before, the market finished at 29.64, which was just over it. So you've got 2 weeks of under it. My rule of thumb is this. I count each consecutive week is taking away one of the percentage points on the Bollinger Band so that when they say 95% of the time, the market will trade within the band, which is 5% out of it. Now I give the market a 3% chance next week of staying out of the band. So 97% chance that it'll swing back in it. Is that a reason to be long? No. Is the market excessive? Yeah. Did the market fail back here at the combination of the 100-day and the lower Bollinger Band? Yes. And the market's been in a free fall for all the reasons that we all know that I don't have to go over and over. The world is fighting this COVID-19. It's going to get worse before it gets better. It's that simple. The case counts are going to go up. Businesses are going to slow down. People are going on unemployment. You know the whole routine. The market will not wait for the worst event before it turns. The market will find a reason, one way or the other, to say it's getting too far and we've already discounted everything. Don't be the hero picking that moment. If you're going to be wrong, be with the trend until it changes. That's the hardest thing for people to get. In terms of the market, when we look at momentum, it's down. Now on the weekly chart, momentum's either up, down, or sideways. I don't look at it as being overbought, oversold, or locking in one way or the other the way it does on daily charts. Down momentum, down chart, 2 times under the lower Bollinger Band, looking for it to move to the right-hand side. That is not indicative of a bottom. We then take a look at the NASDAQ. Sorry, that missed it up there, but you've got lower highs, lower lows. Now, the 200 week moving average does come into play here, and it comes in the 65.90 level. What do you think are the stocks that analysts are saying they want to nibble into right now? The old FANG names. That seems to be one of the favorite areas that I'm hearing the analysts on TV talk about. So I'd be looking pretty hard at that number to see how it does there. Is there a reason to be bullish? No. The market's under everything. Trend is down. When we come to the Dow Jones, you didn't hold. Now, you tried last week. You can see how the market first tried at the 100 week and the lower Bollinger Band. Then went to the 200 week and wasn't even able to get back up to it this week. See, just like in the other indices, you've got a couple of weeks now under the lower Bollinger Band. I'd assume that the market soon tries to get to the right-hand side of it, and you'll hear all week long, well, you know, maybe the market's getting its footing under it, blah, blah, blah. Don't be the first to that party. That is not the party you want to be to. If this thing's going to turn, it's going to be plenty of what? Opportunities. I don't know where the bottom is, and nobody I know knows that. What you'll see the pros do is they'll nibble. I want to use that word. If you're an individual stock trader, that's where you're nibbling. But as a futures trader, no, you're still in very much the bear camp. And if you get my morning subscriber video, tell me the last time you saw me come out with as many sell words as I did. I don't think you have found that. And that's because I've been waiting for this Friday to happen, and I thought the market was going to let go, and I think it'll let go into Sunday. Doesn't mean I'm right, but that's what I thought. In the VIX, it's been a run to the upside. So you had a big base. You broke out. It hasn't done anything. If you threw the name off this chart, and you went into a classroom with people, and you said to them, okay, look what's happened. The market's trying to break out of this. Is that bullish or bearish? I know you're going to say, oh, it's too high, and I'm going to say if you have 2 weeks in a row over the Bollinger Band off sideways action, it's a breakout. I don't know how high it can go. That's not what I'm saying. What I'm saying is until it's over, it isn't over. And that's pretty much been how this particular market has acted, okay? And that's how you look at them. This, oh, I'm sorry that we missed the name there, but this is the weekly 10-year note. And this market, and I know that you're all saying, oh, look at this market broke out, and I agree that it did. You had your run, but markets only stay out of the Bollinger Bands 5% of the time. So the sucker play is to keep buying this rally because it's not going to end. You know you got to 0.31 on the interest rates, and then the correction came in, and all the market has done is moved into the Bollinger Band again. It's done its job. So the trend is still up. Now you have divergence in the chart. You have momentum pointing down. You've got the bias up and the trend up. The market hit a peak at 0.31. I know you might think it's going to 0, but the market added 0.9 to that during the week, and now it's back under 0.1 again. Very difficult, but why would you want to be short Treasuries as you see all that's going on? Bearish? No. Let the bull market end on its own. Then we get over to the dollar index, which has had a major run to the upside. Then you got the lower low, higher high. You've broken out to the upside on the Bollinger Band. But let me take you back to this. How many weeks do you have out of it? 1. That's not a breakout. That's a run up in the market. Be a little careful. You could be under that upper Bollinger Band before you even know what hit you. This is not a trending market. This is a panic market. When you get that kind of move, you get it up, down, and then back at you. What a great time for you to try my morning subscriber videos. Because, yeah, even though the markets, I'm not going to be probably in the office with the shut-in, I'm doing all my recordings at the normal time in the morning. So let me explain how this works. The whole idea is to give you confidence in what you might see and what somebody else might see from a charting point of view. And the one thing I try to do is be consistent in terms of analysis. That does not mean I'm consistent in saying what I do in the morning and I say buy here, sell there. You'll judge that. I'll leave it for that. But I'm going to start, and I start recording 5:40 a.m. Central time roughly. So that's daylight standard time. But typically 6:30, quarter to 7, you've got my videos. They're out, they've been rendered, they're posted. You'll get a push notification that they're there. And what we even give you with the subscription is we're going to give you an app for your phone so that it gives you a push notification. Nonsense with this text message that you pay for. Push notification, just hit it and the video is going to play for you. I'm going to review for you the markets with my points of entry, and yeah, I am giving points of entry and exit and what to do. Even on days like today, I was very aggressive today. And it gives you maybe that idea of confidence you need. So I'm going to talk fundamentals, chart analysis. And if you go to our website to watch it, it's always in this order, and it is on your phone. But the difference on the website, there's a, if you will, a scroll bar on the bottom. And as you hit it, you can move from whatever section you want instead of just pulling it on your phone and trying to see what you've got there. So for those of you that just want to know, hey, I'm looking at the sugar market. Boom, I want to know what energies. Or you can watch the whole tape. I think you'll find that it's about a 20-minute video. It covers everything I know. I typically start out with the day's fundamentals, what has happened overnight, review with you what's gone in Asia so far, Europe, bringing you back to America. And yes, we're going to get a certain amount of economic data. We try to analyze it and see what to do. It is $7.95, less than a tick in most markets. You got it for 30 days. Then if you want to continue, it's $15 every 30, or you can move at any point to a one-year subscription. You pay that up front. It's equivalent to $13 a month. At the same time, I have been giving access to my afternoon Spider ETF subscriber video, and we're going to start charging for that soon, but right now it's been free to you. So how do you get this? Go to iraepstein.com. Under the word research, it explains it, and you sign up right there. One final thing. I'm also putting in, because I realize everybody's going to be at home with these shut-ins, my charting course at a very deeply discounted price. But you got to be a subscriber to my video. Then at the end of that video, it tells you how to do it, the codes, put it in, and away you go. I'm Ira Epstein. You have a good day.